Okay, good morning, good afternoon, good evening, depending on where you are around the world. I'm super excited to host you all this morning. Thank you all those who are here on time. I see people coming into the lobby as I speak, so we'll get it going a little bit slow as people get in and find their seats. Thank you, everybody, for joining us for this webinar. My name is Luke Trelaw. I'm a partner and head of strategy at KPMG Vietnam. I'm also the moderator and host for today's webinar. We are delighted to sponsor this event with PaymentComponents and Monet to cover the exciting subject of payments and data revolution. It really is a revolution. We're excited to get into it. This is part of a financial strategy series of KPMG, where we'll bring thematic topics on fintech to our audiences around the world, giving them insights into trends, opportunities, and what these leading developments have to offer them. With me, I have three panelists who are subject matter experts in their respective fields. I'd like to welcome Haroon Anwar. He is a banking practitioner who has international transaction experience, specializing in payments, digital banking. With him, we have Petros Geronis, who is a UK Singapore-based advisor to fintechs, banks, and digital business strategies. And Fotis Papastenegos, who leads the product development team at the European financial technology company, PaymentComponents. Today, we will talk about the changing impacts of payments industry, especially the advent of ISO 20022 or 20022, depending on what your preference is. Let's begin with Haroon. Haroon, can you help us understand the hype behind this new standard and what does it change in the way that we make payments? What changes can we expect as an industry going forward?
Hey, thank you, Luke, and thank you for inviting me. And hello, everyone. I'm really glad that you're part of this webinar today. Now, Luke, let me just put some context here. Back in the 70s, SWIFT launched the message types, different types of categories. And we had series 100 for payments. Then we had some other popular series around series 500 for securities, series 700 for trade, etc. And at that point in time, technology was limited. There was a requirement to exchange messages in a secure way between banks and send the messages across, but technology had not evolved. Now, fast forward this to our current period, technology has come about where we can process transactions faster, able to manage and interpret data in a much more effective way. And this has led to a shift in a plan to take things forward among the banks as well as other counterparties and clients. So what is ISO 20022 and why does it help everyone? Number one, all underlying transactions that we see are to support a commercial transaction. So any financial transaction at the end of the day has an underlying commercial transaction. And in the past, because this data was not extremely structured, we did have some challenges of interoperability, data truncation, etc. And let's say a remitting bank would send certain information going through correspondent banks, etc. When the receiving bank got the information, sometimes the data was lost, creating problems in reconciliation, proper monitoring, etc. So what this is going to do is in this type of, we're going to create a universal language, a language that unifies the way banks talk to each other and how the bank carries that information in transaction. And this data-rich language is a vast improvement over the previous one. It cuts across different areas of payments, securities, foreign exchange, trade finance, etc. And what we see is that SWIFT has really pushed it forward, but the central banks across different markets have also embraced this. And they're looking at converting their high-value payment systems, not only for cross-border payments, but for the domestic clearing as well, making sure it's all along the same lines and infrastructure, enabling for payments to happen smoothly across the countries, across the counterparties, as well as with the clients as well, making it much easier to process data and make it more efficient. Now, at this point, I mean, let's look at some of the challenges banks face, and banks are trying to keep up. They're trying to serve their customers best, but there are challenges where sometimes, if the data is not well processed, they can't help their clients get that reconciliation they need. They can't monitor the issues around compliance and sanctions and other areas. And at the same time, without having an insight on what the payment is all about, which is predominantly what the banks do, they're not able to give the full business value that the clients, whether they're at retail level or corporate level, deserve. Yes, Luke, you have any? Does that help?
Very much so. Arun, were you finished there, Arun? There was a bit of a background noise.
I don't know. That probably came from somewhere else.
Yeah, I think somebody just had their mic open. So sorry. Go ahead and continue.
No, what I was saying that with ISO 20022, the banks would be able to have a much deeper insight with all the data that accompanies the payment, making the processing of payments faster, easier. Automation would be much more effective, and the insights and analytics that the data would generate would not only help the bank serve the clients better, but also be able to generate some business value propositions for the banks, as they can use that data to not only do effective compliance, monitoring, etc., but help clients do better reconciliation, give better insights on what their payments are all about. The clients can use the data for better reconciliation and better processing into their system. So this whole connectivity and interoperability will be far more impactful for the clients as they realize. And this timeline globally is expected to be achieved over the next 3 years. So over the next 3 years, we see a massive shift happening from the previous message types of MT of SWIFT to the new ISO 20022 that's also known as MX message type.
Okay, well, thanks, thanks, Arun. That's fascinating. I'm sure, considering the major shifts, there are many challenges for the industry players, and as they look to shift away from the previous methods to new ones, they will have to overcome multiple areas that will impact the banks themselves, clearing systems, and of course their customers. Fotis, considering your company has helped many banks through the transition and helped them with the mitigation and migration path to ISO 20022, what have you seen as potential areas of concern, and how have you helped banks address them?
Okay. First of all, hello to everybody. Luke and Harun, thank you for the interesting things you've shared with us so far. My name is Fotis, and I'm the product manager in Payment Components. And as our name implies, we offer valuable software components like application or SDKs to banks and financial institutions like JP Morgan, Citi, Credit Suisse, or even core banking providers like Temenos, Codebase, Intellect Design, Mambu, to all kinds of financial institutions to cover business need in the payments and open banking space, in the two distinct spaces. Now, on ISO 222, to understand the significance of this change, we have to highlight some things. We are talking about the way we communicate information about payments, about account-to-account payments. But payments are the fundamental action that we can do as consumers in any market. And transactions, global and local, are the fabric of our economic system. They are the bloodline of our economies. So we are doing this fundamental change in this very basic level. So the transition to ISO will force changes to all systems that utilize payment information. And this will bring even more changes to the way we exchange information about transactions. And it will affect not only the payment processing, but most of the banking system, as you mentioned before, and departments. So what we see is that change will be the only constant in this new world of payment in the financial industry. And this requires open and flexible payment systems. And that's exactly the opposite of what we see today in the most of the banking world. So let's see what banks can do now to handle this change. With the deadline of November 22 approaching really fast. So there are two ways to go about. One is the translation solution, as we call it, and the other is the migration solution, the native solution. Let's go over the first one, the translation. The translation solution is actually a process where the current, let's say, for cross-border payments, the current SWIFT empty messages for incoming or outgoing, they are translated into their ISO equivalent. Of course, there are rules and there are instructions on how to do that, to handle the differences between these two. But let me give you an example, a use case. So a big Asian bank wanted to go with the translation solution because they were exchanging a small number of messages on Swift MTs, and they wanted to now change to exchange on the ISO format. But their system was a legacy one. It was written in a very old language, and it was not really possible to change. So they just took this kind of a solution to use it as their long-term strategy, because replacing a legacy system just to deal with a small number of messages, it's either too time consuming or too expensive, or even both. But in general, the translation solution, it's good to give you a solution for this extreme case, let's say, but we don't see it as a good strategy in the long term. Next slide, please. As you see in this slide, there are a number of downsides, and it can give you a quick head start, can make you compliant quickly, because November 22 is very close, but it's rather a stopgap solution for financial institutions. The second option, the migration, it's actually where, for let's say an outgoing message, all information related for this message is passed from the bank's backend system to the solution, and a native ISO message is constructed, validated against specific business and network rules, and sent out to the network. Likewise, when an incoming message is received, then it is parsed, stored, and all its values can used later on to enhance all other processes and power future products. So developing a native ISO payment processing capability is a more suitable strategy to reap all the benefits from what ISO20022 has to offer. With a native solution, banks and financial institutions will make sure that no data are lost, either for compliance, for audits, or simply for having the ability to make more informed decisions and build better products and satisfy customers' needs in a more competitive way. So the most convenient solution that we have seen for this problem is to add a payment hub, a payment component, next to the core banking system, or to the current payment solution that a financial institution might have, to add all the required agility and flexibility. And let me give you another use case from a European German bank. They needed to replace their current core banking system, but their time frame was really tight. Keep in mind that in Europe, besides CBPR Plus, that starts from this November, replacing the SWIFT MTs for cross-border payments, in Europe we have also the RTGS system that we will migrate to ISO 20022 in a big bank, as we say, it's one-day switch. So their time frame was really tight. And they chose our payment hub, Upload Hub. And why? One of the reasons was that it can support both approaches, translation and migration. It's a lightweight financial messaging application that is able to modernize payment flows at a fraction of time and resources. So what we've done with this case, we firstly integrated with our current core system, the legacy one, and we translated the Swift MTs, the current message format that they have, to the ISO equivalent. So they are already, we've done the integration in about 2 months. So now they are already able to exchange messages in an ISO format. And as we were doing the integration, they've decided with which new core system they will go. And what we are doing now is actually integrating with this new core system. And at the end, what they will have, it will be very significant because they will pass all the required information to Upload Hub to build a native ISO and exchange ISO natively. And then when they will feel ready, they will have the ability to withdraw their legacy system and start exchanging ISO messages without changing anything with their interface to the outside world. And this is very crucial for them. So with them, we've managed to provide quickly agility to their payment system. And also we did not only offer them an ISO, let's say, solution, but we helped them speed up their in-house development too. So whatever is your approach to dealing with constant change, because that's the big question that we have to answer. How should our systems and financial institutions now deal with this theme of constant change? So we can offer components to you that can make things easier. And I've just given you solutions on how to manage this adoption and start collecting all this useful data from payment systems. But what can you do with this data? I think Petros has a very interesting proposition for this later on. So, Luke, back to you.
Yeah, thanks a lot, Fotis. That's really, really insightful. I appreciate that. I'm sure others in the room have questions as they hear yours and other presentations coming up. I would draw your attention, audience, to the top of the page where you'll see a Q&A. Please go ahead and start typing your questions up there so that we will address your questions thematically at the end of our conversation today. Okay, so Fotis, thanks a lot. That's very insightful, but it's quite the undertaking for the institutions that are going to be embarking on this journey. As you mentioned, the deadline's approaching. Is there any way to simplify it? Is there a way to streamline this process to get from A to B?
I mean, there is a lot of hard work ahead, for sure. And what we've seen with this German bank, I think it was a very good way to go, because they broke this process in small pieces. They managed to quickly be compliant, let's say, to be able to exchange ISO by November 22 with just by using the translation, let's say, solution that we offer. And then because our solution offers both approaches, they had all the time they needed to build their strategy and to take care of all the things for their native adoption of ISO. I think that was the best strategy that we have seen so far.
Very cool. Very good stuff. I really appreciate all that you're saying here. Maybe now I could turn to, hold on here. Oh, shoot. Petros, you fell off my screen. Did you turn off your video? Could you please turn your video back on in case it somehow fell off?
Video is on, but maybe I just moved to the background. Can you see me?
Yep, let me add spotlight for everyone. Okay, well, thanks a lot, Petros. We just heard some very cool real-world examples of how this is a game changer of transitioning, and I'd like to ask you a similar question, but from a slightly different angle. So, as we move into a data-driven world, no, you've been engaged by banks in Europe and the Middle East to help them on their journey, similar to the process that we just learned about. What do you see as the evolution of payments in this aspect? How can banks take advantage of the monetization of data that will be generated by ISO 20022? And as we transition away from a product world to a data-driven world, or into a world where maybe we are the product. We as in the consumer are the product, and this mindset is going to shift. And so how have you seen this transition take place, and what insights can you share with us about that journey?
Thank you very much, Luke, and welcome everybody. I just want to add something to Foti's point, and having worked especially with some banks in the Middle East during COVID, for them to implement what payment components did took them more than 2 years, and being able to integrate something like this in months is actually a game changer. But coming now to what Luke was saying, obviously you have an expense to implement, to upgrade. And the question is, being compliant, does that actually make money? And in buying all this technology, does the tech make you money? Because we all think of this being a cost center, and this is what needs to change. Tech is the underlying in banking that needs to be the profit center that generates the money, as opposed to a cost center. And this is the big transitions that we're seeing, partially from the neo or challenger banks, partially from non-bank competitors who are entering the banking world, whereas the banks are dealing with the ordinary implementation of the compliance burden. And so what we've seen here so far is that we have a core banking system, and on that banking system, in order to be able, at least for cross-border payments, you need an integrating solution whereby you have payments and you have the messaging library under ISO 20022. So now, with every company being a tech company, it is really the question, does tech make you money? And I want to bring firstly an example out of big tech. And we all know about Facebook, and the last time they published this data was in 2016. And in 2016, Facebook had a turnover of $28 billion. Now, people like you and I typically do not pay Facebook. So Facebook has 2.9 billion monthly users and 1.6 billion daily users. But these users don't pay. So as Luke said, if we're not paying for the product, we are the product. So how does Facebook make 28 billion in 2016 or 84 billion in the last audited accounts? So most people think it's advertising. But in 2016, they published that advertising made only 8 billion out of 28 billion. That's less than 30%. That means they're making money from something else. The advertising, I'm not trying to play down $8 billion in revenue, but that is insignificant compared to the amount that they're making from selling data, from selling data analytics, which makes more than 70%. And if we apply this to the last figures, that's about 60 billion just out of selling data. And what data does Facebook really have? Likes. Now they know where you like, what you like. They have some personalized data about you. They aggregate that data. So how do they monetize it? And it's basically three, what appears, simple steps. You collect data, you analyze data, and you monetize the data. And that's where Monet in Singapore comes to guide you through this journey. Now, banks have a few concerns, and they say, hang on, isn't this a breach of confidentiality? And who owns the data anyway? The customer owns the data. So we've had a major breakthrough starting in the European Union saying that data is owned by the client. And then is it legal to disclose this data? Well, how is Facebook doing it? I have read and I accept the terms and conditions, which took my lawyer 15 billable days, 3 weeks, to read. So it takes us usually about a second because you've attended my previous speed reading course. Now, so with the data ownership being clear and aggregating the data, banks are theoretically able to monetize this without being in breach. Now, do banks really know their customers, right? So we have KYC requirements, partially by law, implemented by the regulators, but banks don't know Jack and Jill because the American couple today behind them all works with about 30 to 40 financial service providers, of which typical banks here in the background are less than a handful. And all these players are already, with client approval, using the client's data. And in the remittance business, we have some competition in ASEAN with Money Match, globally WorldRemit, but the current leader is Wise, formerly TransferWise. So how do we go and take the data that banks have? And you understand that banks have way better data than Facebook. They have way higher quality of data. So if we were to actually start analyzing this properly, we could start making money, or we could use this data internally first, and then we could look at monetizing it externally second. The first step here is that we need to start effortlessly analyzing the data that we have, firstly for internal consumption. So we need to start collecting, and we can do that firstly as part of this ISO20022 migration. Later on in other talks, we will show you open banking, client engagement, staff gamification, neuromarketing. That's going to give us additional data. But what insights can we get from the migration of SwiftMT to ISO20022? The first very simple insight, and we've been doing this for a Middle Eastern bank that eventually decided in order to speed up, to use the payments component system, but we then went into creating dashboards with the data that the new ISO 20022 allows us to access very easily. So the first thing is we can start seeing cross-border payment corridors. Whereas in the old system, you were just sending the message out and it would go, as Haroon said, through this system of correspondent banks. Now, all that information is actually transparent. So you can see if a payment is going from New York to Delhi, you can see how that payment might be bouncing through the system. So here we have a simple payment where it's going to London and on, but this could be actually going to Montreal, from Montreal to Paris, from Paris to Frankfurt, from Frankfurt to Dubai, and then from Dubai to Delhi, right? So you can see where the payment corridors are, and therefore you can start seeing where are the correspondent banks, how much is being charged for these transactions. I want to give you just a sense of how much money banks are making from this. I once sent £1,000 from London to Kuala Lumpur. And I asked my friend in Kuala Lumpur, the recipient, to send me the money back. The whole process took 14 working days. And from my £1,000, I got £840 back in return. So £160 were the transaction cost for the round trip, because the exchange rate did not really affect this. But asking a Malaysian bank, they said they charge 5 ringgit, which is about £1. And when I asked my bank, they said, oh, they charge £15 for the transaction. So this corridor was extremely costly in between. So therefore, this allows you already to become more cost effective for your clients. The second dashboard that we were able to show is to which bank are funds moving to. So we were finding that from this Middle Eastern bank, a lot of money was moving from different accounts, from different clients, to a bank in Geneva. And so therefore, what we can see is that the bank in Geneva is basically stealing your customers, because that's where the funds are going. Then we can start seeing outflow seasonality. So you can see here that in June, July, August, there was less outflow, but at other parts of the month, there are other months in the year, there are bigger outflows. But what is even more important, because this theoretically you could have collected manually, it is the real-time payment in and outflow, which allows you to manage your daily liquidity. And what banks really understand is that managing your daily liquidity at 11 a.m. in the morning comes at a very different cost than if you do this after general close at 4 p.m. in the afternoon. So this immediately provides you with money saved from getting better funding. Also, you know that you only need the net liquidity as opposed to overfunding with your getting liquidity for your total inflows and borrowing for the outflows. So here we already have some really valuable data. Another issue which is more relevant for IT is now you will be able to see, for example, if you get a lot of PAX04, which are return messages from the recipient, that would show you that actually the messages that you're sending out are in error, and therefore the payment doesn't go through. And so you have to go and redo this, and this costs money. This creates customer dissatisfaction, and therefore just by migrating to ISO20022 on a system like PaymentComponents, you actually get this dashboard on top of it. So this is something that is immediately useful as opposed to trying for a I'll do it myself solution. The next benefit is that you actually get additional insights when you start mining the data. So when you start mining this using artificial intelligence and machine learning, we then have insights about anti-money laundering. So using a stereotype, if you start seeing that payments from your bank are going to a specific account in Nigeria, right, traditionally that would raise a degree of questions. So is that fraud? Or is that true client defection? And of course, the topic of sanctions has become very important unfortunately, over the last month, but we used to have sanction issues before. So what I've tried to show you here is that in a very first step, you're able to now move to start collecting and analyzing data, which becomes immediately useful to the organization. This is the first step that banks need to do in order to become a proper tech company. Because the danger is that the likes of Starbucks, the likes of Amazon are going to come in, see what happened with Alibaba, and they will become financial institutions, basically taking away our clients. So we've seen today SWIFT and ISO20022, and we will have next presentations coming up on open banking, on how that is helpful, on client engagement and staff gamification, neuromarketing, and so on. So with that, I'd like to give back to Luke.
All right. Well, excuse me, a bit of a cough. So thank you very much. Thank you very much. That's really, really exciting. There's a slight bit of an echo. You might want to mute. If I could just mute you there. So that's really it's really exciting and terrifying, actually, the amount of data that our banks now have over us. If you think that Facebook has a lot of data on us now that our banks have even more data, that's quite frightening. And thank you for highlighting some of the upcoming events that we have coming up. We'll keep everybody in this forum abreast. It sounds like, based on your introduction, that we should add blockchain to the list of disruptive technologies. It's unbelievable that you sent a transfer from UK to Kuala Lumpur and back, and you only had 80 pence on the pound, I think, as the Brits say. We'd say 80 cents on the dollar, but to each their own. Okay, but anyways, it does really seem that data is the game changer. At KPMG, data is the center of everything we do for our clients. It's at the center of every decision that we help our clients make. Maybe if I could turn back to Haroon for a second. Haroon, what trends are you seeing as shaping the payment industry, and what should banks do to take advantage of these opportunities that present these changes? We've heard quite a bit about the transition of technology, of data, of operations leading up to this date coming up in the future. What trends are you seeing as a practitioner on the ground, working from inside of banks, that you can tell us about?
Luke, and I think both Fatih and Petro covered this topic extremely well, highlighting some key themes that banks have started to realize. One is that with this influx of higher amount of data ingestion, it has to be put to better use. And one of the things that banks are now looking at is not see it as a utility, which in the past was just a payment, was just a utility, a service that was provided, but more into a business value proposition. And what this business value proposition brings is that when we have data accompanying a payment, how do we create value for the client out of it? So one option is that we carry the payment and the data along with it straight to the client and through different customer channels. Enriched data can help them reconcile better. For example, now we could have consolidated invoices in one payment with credit note, debit notes, all those things explained, making it easier for the client to consume and manage the payment automatically, which used to take a lot of time and effort. But now, additionally, with this aggregation of data that the banks will be able to see, they can see patterns. And as Petro alluded to this use of AI and machine learning. With these patterns will emerge opportunities on how banks can serve their clients better, which segments to focus, which corridors to look at, what kind of financing can be provided to a certain segment of clients based on just the flow of data. They can manage their balance sheet better. And it cuts through the entire enterprise. So in the past, if let's say we had relegated payments as an operational function, now we can see, okay, now it cuts through our treasury department, it cuts through our corporate banking, it cuts through retail. So many of our payments actually end up or stay with us only for a day or fraction. And intuitively, while a lot of people have always had this feeling of what's going on, now we have concrete information available that would allow us to create strategic imperative plans to say, this is how we will target better. Now imagine those banks which are up on the curve faster than other banks can offer better solutions and have better a way of achieving the client level of satisfaction here than the banks which are just still treating it as an operations. And we see this across ASEAN, where in Singapore, some of the leading banks are already ahead on the curve with MEPS Plus planning to go to ISO20022 format this year. We have some Malaysian players also looking at working closely with Rentas, which is a real-time gross settlement system in Malaysia, moving in that direction. The Philippines is already ahead of that curve. So they've already implemented that. So we see both domestic, ACH, and real-time gross settlement systems across ASEAN region as well, allowing banks the opportunity to capitalize on this data growth that's coming. It's just about the readiness of the banks to be able to use that data and then again generate business value out of it.
Very well put, Haroon. Thank you very much. Now, as we're getting closer to the end, I would really like to remind people to please click on the Q&A tab. I'm sure there's lots of questions bouncing around in your head, and we're getting very close to that time. But before we get to the question, I would like to thank the three gentlemen with us this afternoon. This is quite an insightful sharing session. I do see that we have a couple questions rolling in so far. So let's see if we can group them into themes as they roll in. Maybe I could just start listing out the ones that we have so far, and then we'll go from there. And thank you for the team members in the background who are working to organize the questions. Let me add. Okay. So how about this sounds like a very technical question, so I'm not quite sure who would be best for it. Maybe right now we send as corporate PAN, PIAN 001.001.003 messages to banks. Will that change in November? Will banks change to the new PAN? Will we see new PAN, or is it the old PAN? That is when dealing with banks, that's always the question. Is it the new PAN, or is it still just the old PAN that we're used to?
Okay. Keep in mind that if we are talking about PAN messages, then we are talking about ISO messages. Yes. And what I understand from this question is that this is a corporate to bank. So it's a client sending a payment message to the bank. The change that we were talking about for the cross-border payments refers to bank payment messages. So this is where the change on the ISO from SWIFT to ISO will happen. From corporates to banks, yes, in most of the cases they have already adopted an ISO, the ISO20022 protocol to communicate with corporates. So PAN will not change.
So the answer is still the same PAN. All right, got it. All right. Well, maybe let's talk a bit about the implementation of the transition. We've talked about the need of the transition, the data that's generated, and all the value, but maybe talk about the actual implementation. So the question is, how long does it take to implement ISO 20022? I'm sure that probably means it probably varies by where your starting point is, but maybe Haroon, you want to take a stab at that, or anybody else?
I think it again, as you framed it properly, it depends on the readiness of the bank and to the degree which they want the change to happen. But as we have seen working with payment components, the clients can do a stopgap, which is to say, okay, we'll just go for the translation solution, which is just to meet the basic foundation. But the real solution is when they look at the migration. And Fatih covered it earlier, where he said that, look, the banks can take a wider view on how they want to serve the business. And if it's a translation, this could, depending on the readiness, could be done in 8 to 12 weeks, right, Fatih? That would be a fair enough timeline if it's just translation. But what we recommend that run both in parallel, so then you can take the full extent of richer data that comes with it through the migration overview. Fatih, would you like to add to that?
Yes, what I would like to add is, okay, it depends on what is the approach that the institution will adopt. But from our experience, I mean, the first answer will be that our solution exposes APIs for all its functionality. So if their core system is already API ready, let's say, and it can communicate and send us all the required information, we can just plug and play it. And this is, we are talking about 1 to 2 weeks. But usually some integration needs to happen between these two parties, and 2 to 3 months it's what we've seen from our experience. That's the most common period.
Very good. Petros, you had your hand up briefly. Would you like to add to that?
Yes, thank you. What I wanted to say is that some players, I mentioned the Middle Eastern, who decided initially to do it on their own, they were at it for about 2 years, right? Because once they reached into testing, there were all sorts of small flaws. So there's a big story here about saving time and money rather than build it yourself to actually get the plugin.
Very good point. Very good point. I want to be respectful to everyone's time online. We want to keep it within our promised hour, and we're getting pretty close to the end here. But it's not too late to squeeze in a question in the chat. So please go ahead and add if you have a question burning your mind. One more quick question on the chat. Somebody asked, what additional opportunities can banks look forward to after transitioning to ISO 20022? Now, we've talked about the data, we've talked about the operations, but what additional opportunities are still out there? Who wants to dive in on that one?
Petros, I guess all around data and using the insights and analytics to create new business models would be right up your alley.
That's really the big picture, right? So what this is looking at is of using data internally, first for the bank, and the next step would be then to use that data externally. So once you then create data aggregation, and we'll talk more about that when we look at open APIs, right? Because it is not just the SWIFT data, it is then access to much more data inside the bank. So it starts with payments, it starts with account balances, it continues with remittances, and then anything else a bank wants to offer. What are their loan rates? What are their deposit rates? And aggregators are already placing themselves there. So This will allow the banks to start getting ready for moving this into a much wider picture than just ISO 20022. And the future is in data, there is no doubt. Whoever doesn't monetize the data, I'm going to be rough, will just become a utility company.
Very cool. Well, thank you very much. I'm not seeing other questions that rolling into the chat. So if, oh, here we are. One just popped in. What are medium-sized banks? And how can KPMG help with ISO? What about medium-sized banks? How can KPMG help with ISO 20022 readiness? Okay, well, directing one back at the moderator. Very, very clever. So here at KPMG in Vietnam, we are not without the need to be aware of this issue. Our clients are in different stages of working our way through this. I would note that as you know, just to talk my own shop, we are the largest professional services firm in the country. We work with most, if not all, the banks here in different stages, so we can help provide banks with lots of case studies for how other banks in the transition have mapped their workflow to the needs. But I'm assuming the question has to do with middle-sized banks, and that the fact that middle-sized banks don't always have the same resources that a larger bank might. At KPMG and as other similar service providers, what we would do is turn to our professional services networks, like the gentleman on the screen today, and look at other markets and how other middle-sized banks around the world have navigated this process. It's the great thing about global standards is that you're very rarely the first person to implement something. So if you're in the process of mapping out that transition, I would strongly encourage you to look to other examples around the world. And I see Petros's hand shoot up, so that he must have examples to share.
Sorry, Luke, no, it's not examples. Are you done with your part? I just saw in the general chat, I'm seeing some additional questions.
Oh, okay, go ahead.
And one that came in that's basically addressing my previous point is, you know, monetizing data will require to deal with regulators. Yes, of course it does, right? We're not talking about doing illegal stuff here, right? That's not, we want to, this is in the spirit of being completely compliant. But if you remember my image of Jack and Jill earlier on, those 30 and 40 companies in the back, which are typically non-banks, they are already compliant, right? So the banks have just not asked for it. The banks are just so scared of the regulators because they have been whacked for the last 15 years, for better or for worse, right? Sometimes fairly, sometimes unfairly. I'm thinking of Basel framework, liquidity requirements, right? Anti-money laundering, all that stuff. But this is a lawyer's job of doing this legally. And once you have approval of your client, so say you do this through an app, you have your online mobile phone app, you have terms and conditions which they accept. Now, I'm not trying to say that nobody is reading them so you can put into it whatever you like. That's the reality of it. The point is, though, that there you ask for permission from the client, and the reasonable client that reads through it has the choice of giving you permission or not for the service. Now, you may not want to put this inside your main app, but it can be an additional service that comes on top of it. And there, you show this to the regulators. And in all of ASEAN, we have sandboxes, right? We have regulatory sandboxes. So you can put it into the sandbox and you can show the regulator, hey, this is what we're trying to do. It's to the benefit of the client, it's to the benefit of the bank, it's to the benefit of the financial system as a whole, right? So That would be my answer to that question. Thank you for that very good question. Is there a follow-up on it?
Is there a follow-up? I can't see the
No.
general chat, or is that a question to me? Oh. Dr. Elvis. Elvis is alive and he's asking banking questions. I missed the question though. Can somebody read off the question? It appeared and then disappeared.
First of all, I think for the monetize question, there is no follow-up. Thank you very much. And now I also read these questions. Swift ISO is to have KYD record in the Fed ISO option. Blockchain simulation works transaction the panel report. I'm not sure quite sure what is the question, but if I understand it, it has to do with the sanctions that we mentioned through the presentation. So I don't know. Probably I would try to give some more information that ISO messages are very rich messages related to the Swift MT. So it's easier to put the needed information to automate also the sanctions that should be imposed in any case. On Swift MTs, you had the tags fields that you would put all kind of information, and in case, let's say now Russia, maybe I was living in a London let's say street that was called Russian or something like that. Current day, let's say, system may pick up this as a blacklisted country or information that has to be blocked on some case. This is handled way more easily with the ISO format. I'm not sure if I have answered the question, but that's what. If we can have a rephrasing of this question, it will help us.
Okay, well, we are at the very top of our hour. I want to be respectful to our presenters and audience members alike. So I would ask if you have any further burning questions, please go ahead and book an appointment with the link in the general chat. There's a link in there. We're happy to have a follow-on conversation. If you don't, if you do have further burning questions, I invite you back to our next in this series that we talked about. I'm not quite sure what topic is up next, but please keep an eye open for that. It should be a really open banking. That's there we are. Open banking is next, and hopefully we'll have a chance to talk about blockchain as well, because now you have my Petros has piqued my interest in that topic now that he's talked about the inefficiencies in the transfer. So please allow me to thank the presenters today, and thank you to the audience for your patience and your interest in this hot topic. Look forward to the next opportunity to talk to everybody in the very near future. Thank you very much. Have a great morning, afternoon, or good night, wherever you find yourself on the planet today.
Thank you very much. Goodbye to everybody.
Thank you. Thank you, everyone.
Goodbye. Thank you very much.
Bye-bye.